December wrapped up a historic year in Metro Vancouver real estate. Sales slowed to levels we have not seen in over 2 decades. While inventory climbed to some of the highest levels on the record, the shift has created very different conditions depending on whether you're buying, selling, or investing. This is Nancy Chi, your Vancouver real estate advisor, here with December 2025 market report. Overall, the benchmark price across Metro Vancouver sits at $1,114,800, down 4.5% year over year. Sales in December were down 12.9% compared to last year, while active listings increased to 12,550 homes, up 14.6% over last year. Simply put, supply has outpaced the amount of demand, giving buyers more choice, more negotiating power. For detached homes, it is feeling the most amount of pressure. The benchmark price is $1,879,800, down 5.3% year over year. There are about 4,640 active listings, and the average time on the market is about 60 days, the longest of all property types. Buyers in this segment are taking their time and negotiating even harder. Sales decreased almost 500 homes from December 2024 and a 1.1% decrease from November. And now for townhomes. Townhomes remain the most balanced segment in the market. As I said for months now, for years now, townhomes remain the most stable and is the most attractive type of segment because it offers upsizers space and also downsizers, is the missing middle density point. The benchmark price is about $1,056,000, down 5% year over year. With fewer listings and steady demands, townhomes are selling the fastest on an average of 42 days on the market. This segment continues to attract move-up buyers and young families. Condos show resilience despite higher demands. The benchmark price is about $710,000, down 5.3% year over year. It seems like it's quite consistent across the board from each sector: detached, townhomes, and condos. All three sectors are decreasing about 5 to 5.3% since last year. Condos have the highest amount of inventory for obvious reasons. There's more density, but also has the strongest sales volume, with 791 sales in December. So affordability continues to support demand in this segment. So since prices have dropped, some investors, some first-time homebuyers are seeing the opportunity now to get into the market after the price drops that we've had in the last few months, last couple of years. Condos are at an 11.2% decrease compared to 891 sales in December last year. As I said, it's quite consistent with all three sectors. It's been dropping in sales of about 5% for condos, detached, and townhomes. So this is just to give you an idea as to why townhomes are more competitive, is because there's less inventory, right? There's only about 2,000 townhomes for sale versus a lot more condos and a lot more detached homes for sales. So buyer leverage is increasing, but uneven. Detached homes are firmly, definitely in the buyer's market territory. So are we in a buyer's market, balanced market, in a seller's market? So it depends on the sectors. So overall, we're at 12.7% sales to active ratio. So we're leading closer to the buyer's market. For detached, we're definitely in the buyer's market. For condos, depending on the area, it's considered a balanced market actually. And for townhomes, a slightly stronger demand with limited inventory means sellers retain some advantage. So negotiating power depends heavily on the property type and precise pricing. So to conclude, buyers have more selection, less competition than in recent years. Negotiating power has improved, especially in the detached and condo segment. This is a market where patience, preparation, and data-driven decisions pay off. So if you're ready to get into the market, get your ducks lined up in a row, get pre-approved because there are deals to be had, and it is the opportunity to get into the market now. And sellers, we need to be realistic on the price and strategize. Detached homes are priced precisely to avoid sitting on the market. Townhomes continue to perform well with the right positioning, and condos need very strong value messaging to stand out in a very crowded field because buyers have a lot to choose from right now. So with lower prices, lower borrowing costs, and more inventory, the foundation is set to improve buyer activity in 2026. So whether demand rebounds will depend on confidence, rates, and economic stability. What will not change is a need for a strategy tailored to your specific property type and what you're looking to buy. So if you have any questions, let's set up a strategy call, contact us, and we can go over that with you together. Thank you for watching and have the most wonderful day, and talk to you next month.